All right. Hey, everyone. Hold on a second. All right. Hey, Mark here, Mark B. Markets. Thanks for joining me for another Greenbridge Investing Market Analysis. I'm not simulcasting today, so I can answer all your questions. All right. Thanks for joining me, everyone. Hey, let's say hi to Eligius, HS. Good to see you. Bart. Hey, thanks for stopping by. Shay Shank. Good to see you. All right. Elizabeth. Got all the regulars here. Thanks for stopping by. All right, cool. So if you're new to the stream, um, just please share your symbol or your market, your altcoin that you'd like me to analyze in the chat now. So when I get to the chat portion, I can check out your chart. Also, if you'd like to put what country or what city you're from into the chat, that's always a fun thing. All right, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, let me get my chart up on here. All right, so today's Thursday. First thing I want to do here is talk about this Bitcoin situation, right? While I'm setting this thing up, it's acting strange. We'll talk about that. Hey, Bart guy, thanks so much for the 100 coins, by the way. He sent me 100 coins. I haven't even started yet. The guy sent me 100 coins on TradingView. I appreciate that very much, Bart guy. Thank you so much for sending that. Okay, so let's talk about Bitcoin first. I want to cover the stock market, of course, gold and the dollar real quick. I want to try to make this as quick as possible. Now, the Bitcoin situation. We have a buy signal that's developing here, okay? If you read my TradingView article, hold on, I'm just adjusting my mic. If you read my TradingView article on Sunday, I talked about the support area. I talked about what I was looking for in the support area, and the market is trying to deliver that, okay? Now, at the moment, we have an outside bar. This bar was a little funky just a few minutes ago. It gave back the whole thing and turned red and actually touched that 56K low or whatever that was. And I was like, huh, that's weird. And then it turned right around. I thought maybe it was another Bitstamp fluctuation, but it wasn't. It was across, I saw it was going on in other exchanges as well. So just to Bart asked a question about that. When it starts to move fast, right, and psychological fear kicks in, maybe I can give some advice. So I'm going to address that now real quick, since we all just saw that. First of all, to avoid reacting to it, if you're not day trading, you should not be looking at smaller time frames, first of all. By staying away from the smaller time frames, like the 5-minute, 30-minute, the 1 hour, you keep your eye on the daily chart and you're looking at the levels, right? This 57K support, that's the general support, number one. Number two, the candle needs to close below that to really prove anything, okay? And as we saw, it went below it, but it has not closed below it. This also, closing is also important for taking a trade, right? This is why I don't like to take trades with an open candle, because this likely could have gotten stopped out. If I bought it at 63 whatever, this would have been stopped out on that noise, whatever that was. So that's why it really pays to wait for the candle close for the time frame that you're working in. So if you're looking at swing trades, which is what we look at, then it's the daily chart, which means the daily candle must close. So this is still an open candle, and that's basically how not to get caught up in that noise, or how to avoid reacting. Because if you're looking at this like on a 1 minute or a 15-minute, that move right there probably got a lot of people short, and now they're probably stuck in the trade, or they're hoping that it goes back lower because blah blah blah, or it could have banged people out. They could have been long and it stopped them out or whatever because it looked like it was going to zero now. That type of movement, that's what it'll do to you. So if you're staying away from that, really nothing happened, really, right? From the perspective of the daily chart, nothing has changed, which means there should be no reason to act or anything, right? That's how you avoid that fear. That's how you minimize it. You see, waiting for the close, and by taking trades based on rules, it helps to minimize my judgment, or it minimizes myself from the equation, I like to say, because the less I can think, the less I have to think, the less I have to do, the better. I want the market to do all the work, okay? I don't want to do any work when it comes to making these decisions, because there's too much noise. It's too random. And there's a lot of times when we think we see something, or someone says something, or we feel a certain way, or whatever, and all of that stuff is irrelevant to the market. So I want the market to tap me into a trade. The market has to do the work. So let's talk about 3 choices you have, right, as far as this potential buy signal goes. Now, if Andrew sends this out tonight, that's going to be on him. I won't be able to send it out if this thing closes the particular way, so that'll be up to him. But I'm going to give you right now the 3 choices that you have, and you can decide if you want to take Bitcoin in this way. So the first one, because again, we are at an attractive location. This isn't the top of the market. It's near the top, and I'm going to talk about that in a moment, right? The recent high, but it's not the high. So that's good. It's a pullback. Okay, fine. So we have the location. It touched that 56, 57K area and rejected it quickly. Okay, fine. That's all good. So here are your choices. The first one is going to be more aggressive, all right? Now, because we touched the level, right? If you want to, this is the entry candle. If you want to be more aggressive and you don't want to wait for the candle to close because you're assuming it's going to close green, well, then you can get in any time before this close because it's basically an outside bar and you have a better price because you're not at the top of the outside bar right now. You're in the middle of it. So you could probably get a better reward risk in this area, but the trade-off is you're buying into an open candle, which means your likelihood of getting stopped out is greater, okay? Now the low of this candle is 56,425. Your stop is going to have to go somewhere below that. Typical risk on Bitcoin right now, based on recent trades, typical risk is 4,000 points, about 4,000 points. So if you're buying this thing right now at 59,785 or something like that, okay, let's say 59.8 or something like that, 59,850, you give it a little room, and you subtract 4,000 points from that, what are you looking at? 55 something, right? 55, high 55s, maybe mid 55s. That's going to be about 4,000 points. That's plenty of room below this candle. So theoretically, price, based on this location, price really has no business going to those levels if this level is going to hold. Now, the level could break, and the next level is going to be 51, 52, 51, 50, 49, 48. That's going to be the next area, okay? So it's possible that it can break. Keep that in mind, even though the general structure is still bullish. So that's one idea if you're willing to take that risk now. Now, the only benefit you have to that is the reward potential. If this thing tests 67K or comes somewhere near that, it won't be as hard to justify your risk, right? If you're buying this thing at 59, what is it, 59,987 now, I mean, it's moving pretty quick. But if you're buying this thing now and you're risking 4,000 and this thing goes back to 63, 64, 65, you've justified your risk and you could take something off. The question is, what is the probability that it can do that? Well, the structure favors a retest, right? That's this area here. You're still buying into the resistance zone. You're still buying into that. So that's a little bit of a problem, and that can affect the trade somewhat, right? So that's why you have to be cognizant of that. Right? This is not like a really nice low support like a 40K type thing where you don't really have any resistance for a while. You're going right into it again. So it's possible that you break it, especially if this structure stays intact. Higher low should lead to higher high. So that's the game you're looking for. That's the more aggressive trade. Now, the more conservative trade, there are 2 of them. One is you wait for the candle to close, and the next candle needs to take out this candle high. The candle high is 61,848. So basically 62, around 62, and your stop's going to have to go around 58, which, as you can see, that can get stopped out pretty quickly. You're buying the top of the outside bar. So, when they fake out, a lot of times that's a good spot to fake out, and look where you're buying into, right? You're buying into this resistance. So, but the candle would be closed at that point, and the new candle would open and be taking that out. So theoretically, you're looking for momentum to follow through. That would be the more of the momentum type trade and letting the market do the work for you. Now, if you don't like that idea, which again, that's not my favorite idea in these situations, the next best thing you can do is you can wait until you get an inside bar. Perhaps tomorrow, maybe we get an inside bar. Whether it's red, whether it's green, we get a bar that's inside the range of the current bar. And the next candle takes out that high, okay? So if you get that situation, that at least you know that the support is intact. You probably can get a better reward risk, and you could put the order at the high of the candle and let the market do the work. So that's probably the most conservative out of all three. All right. So those are your choices as far as the buy signal goes. See, there's no way I'd be able to fit all of that in an email anyway, quickly enough. So you have to choose. The risk, again, on all three of them, the risk is about the same, right? 4,000 points. It's just the probability of getting stopped out is slightly different, right? Because some of them, you're either buying right into this resistance, you could buy slightly lower than it, that kind of thing. And that will affect, your not only your location, right? Where you could, if you buy a much worse price, your chance of getting stopped out is going to be greater, unless you put a much wider stop, but you really shouldn't, because then you can't justify your risk, right? So it's like a balancing act. You have to decide which one's better for you. I prefer to wait for the inside bar in this situation, because I don't like these large, these wide range outside bars. Even though it's off of a support, I don't like these candles because there's just too much nonsense going on here. I like smaller candles. They're easier to deal with, okay? And the ranges are usually smaller, and the reward risk a lot of times, sometimes you don't even have to take the full risk of 4,000 points, when you get a smaller range. So, and the drawback to that also is it may never deliver that scenario, and it may just run away and you miss it. I mean, that's also a possibility. But at least in that scenario, you don't lose anything, okay? So just something to keep in mind. So that's Bitcoin, and so generally the buy signal is forming there. You have to decide what type of confirmation is more appropriate for you. All right, let's take a look at the stock market real quick. I see people putting questions in. So I will get to your questions. Thank you for sharing them. Thank you for stopping by and listening. All right, so look at this, okay? Now, someone in our chat room earlier mentioned that Apple has not come out with their report yet. Now, and Apple was up pretty big today, right? Let's just take a look at Apple. Since Apple is the NASDAQ. I mean, look at this. Apple's up $3.61. I figured they had reported, right? Because I don't even bother checking. I'm like, well, a candle like that, they must have reported. If that's pre-report and people are buying this now, you're nuts. If anyone's buying this now, okay? Nice high or low and all that kind of stuff, but really bad location. And that's definitely like a buy the rumor, sell the news type of situation. Definitely, I'm not interested in that. But anyway, that takes us here, right? The NASDAQ is pushing all-time highs. What is this? So, just a few weeks ago, everyone was bearish and blah, 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 and we're pushing all-time highs again. Stimulus market, whatever you want to call it. Now, people were asking about some shorts yesterday, and there's no sell signal here. So what do you do in this situation? Well, if you're not day trading, because day trading is the only thing that you can really do to control your risk, the magnitude of risk here is very high. Even though this looks beautiful, right? Looks great. Looks like it's just going to keep going and going and going. You don't see what's in front of you. Okay? Keep in mind, on a chart, you cannot see the sell orders. You cannot see the lack of buying that's going to take place in the future. This is a highly vulnerable location. Any little negative thing comes out and you're in pullback mode again, right? And I'm not getting caught up in that. The risk of the location is too high. So what do? This is a great place to sell. If you own stocks from good prices, you bought the bottom of this move. And we talked about this move in my stream here. We talked about this as it was developing. You just had to have the courage and the conviction to take the stocks that you were watching, whatever. And these would be best for market correlated stocks like semiconductors, stocks like AMD and all those other ones. But let's take a look around real quick, right? So we saw Apple. Let's take a look at Microsoft. I mean, these things are on their highs. Look at Google. I mean, I guess that was from yesterday. I guess they reported. I mean, I guess. I don't know. I don't pay attention. But look at this. On its highs like that. Facebook's been having problems, right? Look at Facebook. Oh, it came back. It finally came back a bit today. But these are driving that thing. And a lot of these, let's take a look at Amazon, right? Amazon, strong day. But these aren't making all-time highs. They're just having strong days, and they're going back into resistance levels, a lot of them, not all of them. And that, to me, is just very vulnerable. Why would I want to buy the highs? I don't buy highs. The place to buy is the pullback if you can get it, right? That's where you should be looking. That's where you should be interested. So as far as the NASDAQ goes, nothing to do here but take profits if you have some, or that's it, right? I wouldn't short this because there's no reason to short it. There's no sell signal here. There's no candle lows being taken out because people say, oh, you got a double top. Well, it's not a double top yet. It may turn into one, but it's not yet there. And this thing can squeeze a little further because you get too many people that, think it's a short. Look at the S&P. Higher low, it's going for the higher high. So there's no reason to short these yet. Okay? I'm all about shorting them even for a brief pullback, but there's just no reason right now. These things are ridiculously strong. I don't have much faith in them, especially with the way the stuff that goes on, the way they handle things in this country as far as their economic policies. I just have a hard time, especially with buying highs, right? I'd rather buy pullbacks where I know my probability is better. I mean, that has nothing to do with economic policies, but still. All right, anyway. So that's the NASDAQ and S&P. Basically, nothing to do there. So in these situations, I would avoid market correlated stocks and look at stocks that have a tendency to do their own thing, okay? Like biotech stocks, the Trump stock that went nuts recently. I mean, things like that. Stocks like GameStop is another one. I mean, these things tend to do their own thing. They don't pay attention to the market. So those are, I think, a better choice, for getting a move that's not correlated. Because what happens if you buy your stock and the S&P peaks? Right? Now you're going to get stuck in that. So anyway, all right, let's take a look at gold real quick, XAU, USD, because gold has been confusing. Look at this. What is going on with gold? Now, gold keeps going around this 18-something resistance area, right? Right now, it's at 1801, and it fools around. It goes as high as 1830s, 1820s, 1830s. And I think it keeps sucking people in. And of course, when gold has like a decent day, all the gold people come out and tell you that it's going to 2,000 and blah, 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 blah. All the hype that comes along with that. And it doesn't go. It just doesn't go. So if I'm not buying at a support and the range low is 1750, then I'm not buying gold because I'm not getting caught up in that nonsense. Now let's take a look at the dollar because this is, I think, the problem, right? Look at the dollar today. Dollar got hammered. And I don't know why. I don't ask why. I don't care why. Because why is not going to help me determine where these things are going to go next. So what I want to know is the location, right? And this old resistance on the dollar, right? That $92 area on the US dollar index, that's an important support. That support defines this structure. See the structure? Higher lows, higher highs. Now, yes, we have a lower high here. And you can argue with me and say, look, that's a lower high, and we have a head and shoulders. That's bearish. Yes, the structure, this pattern is bearish, but it has not changed the overall structure. This is context, what I'm describing here. A lot of people miss that. It's not something that these fake gurus will talk about because they don't know about it. And the other thing is, it's not obvious on a chart, right? No oscillator is going to tell you about context. So here's the thing. This level right here needs to hold. Yes, we have an ugly candle. Dollar's pushing lows. It took out this support area here, right? What is this? 93.40, whatever, 93.5. So that was a support, but 92 is going to be much more important. So here's the thing. Over the next few days or going into next week, maybe early next week, do we get a reversal? Do we get a bullish pin bar here? Do we get an inside bar? Do we get a reverse to go higher? If we do, and this level holds, that means dollar is still strong, right? That's why I'm not interested in gold. Now, if the dollar breaks 92, which is also a possibility, if it breaks and closes below 92, that's going to be the first sign that we have a change in this bullish structure. I mean, this thing has been bullish since, what, the beginning? I guess you could say, well, more consistently since June, okay? So If it takes out that level, then I will be convinced that the structure is changing and maybe we're going to see a more significant pullback in the dollar. If that's the case, then we should see strong moves in things like the euro. I mean, look at this move in the euro. Clear higher low, higher high. That's a structural change. So if the dollar follows through, the euro is probably going to be a good long, okay? Or looking for longs in the euro. Same with the pound. The pound's been relatively stronger, but higher low, okay? So I'd be looking for the breakout of this resistance if the dollar can break. So you have to keep an eye on that. That's going to be an especially important thing for these Forex pairs. All right, so that's the gold, the dollar, and all that stuff. Now let me just take a look at the bond market real quick because we can't forget about the bond market, even though it's boring, I know. Now here's the thing. The bond market has not changed either. We have this push here to this old resistance. As you can see, lower highs, lower lows. Potential lower high right now. So look at the inside bar today. Inside bar. If that thing closes and takes out that low tomorrow, we now have a potential new leg lower in the bonds. Now the bonds move very slow and it takes a very long time for them to really have an effect on anything. But if the bonds make that lower low, which again could take an entire week or longer, then that's implying rising rates, and that would also imply that the dollar is not going to break that bullish trend. That's why you need to keep an eye on this. And if the dollar is not going to break the bullish trend, that means the euro and the pound and gold and all those things are not going to go higher, most likely not go higher. They're not driven only by the dollar, but the dollar will put a lot of pressure on them. The stock market will also likely have a problem. Now, I think in the month of November, the FOMC is going to have an important meeting where they're going to give some more clarity from what I understand. I don't know, how they change things, but something to keep an eye on, because if they make any kind of change that the market's not expecting, you can see a more dramatic move, especially in the dollar. Now, another thing to touch on, and I'm going to get to your questions here in just a moment. Another thing to touch on is we are in holiday season now. Okay, I mean, pretty much the next 2 months is going to be holiday optimism. Go to Walmart, buy all your stuff, and blah blah blah, presents and this and that, and Christmas music in stores, and blah blah blah. Right? So the holiday rally, I think, has been, since that October low that we saw so far, this looks like the holiday rally. If we do get a pullback, I mean, I don't know how dramatic that pullback will be. There's no way to know, but I would anticipate that it probably won't be too dramatic if there's nothing really, if there are no real bearish catalysts, because we're just going into that psychologically optimistic time, right? And there's a cycle. That's why it's called the Santa rally. So something to keep in mind, okay? People are going to be looking to buy stuff. Now, if that's the case and we pretty much don't really have a pullback going into the new year, then maybe we get the real pullback in February, okay? Like the more dramatic pullback. It's possible. And we saw something like that the year before after that whole election cycle nonsense and this and that. And the market just rallied and rallied and rallied and rallied. And even in March, it didn't really want to pull back. Not really, right? We had some pullbacks here and there, but the market never really pulled back. I mean, look, I'll just show you real quick, right? I'm sure you all know. Just looking at the S&P, right? Just going back. If I just zoom this out, I mean, look at this, right? Just going back a year. Let's go back, right? Look at this. It's ridiculous. Look at this. I mean, since you could have bought this thing in November of a year ago, and it's like a lot higher, as you can see, right? So just to give you some perspective, is this a place to be really investing and buying and feeling safe? Definitely not. You've missed the run. Let it pull back. But when will that pullback come along? There's no way to know. That's why you note your support levels in advance, and when the market delivers the opportunity, you are prepared. That's when you take interest, right? That's when you are prepared to do things, not chasing it and reacting to it just because your favorite guru on YouTube is telling you that the market's along, blah blah blah. Okay, enough of that. Let's get to your questions. Again, thank you everyone for your patience and listening. I hope you got something out of that. All right, so Eligius asks about LMT. Let's take a look. LMT after earnings. Oh yeah, look at that. So, and look how, here's an interesting thing about this. All right, look at the rally going into it, right? You see that? I mean, it looked like this was beautiful, nonstop, blah, 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 right? And then the report comes out, and then you see this. So that's what I mean about buy the rumors, sell the news nonsense. You don't know how that report is going to affect the perception of investors or the participants or whoever, the crowd that is involved in this thing. And if they come out with a good report and the report is just not good enough, it doesn't meet expectations, you get this. And Apple may pull the same thing. You know, who knows? I don't know. That's why I don't put any weight into those things. I let, report comes out, we see the reaction. More importantly, I'm interested in the levels. So to answer your question, as far as, what to do with this thing now, well, you are at a good level. All right? Look at the support level. So at least you have that, and you didn't have to wait very long for it to get there. Look at this. This goes back to where it was at the beginning of the year, right? Look at that. So it's a good location. The thing is, you have a lot of bearish momentum now to deal with. So it looks like you have a couple of days here, potential little mini double bottom, but that's not enough structure to really justify a momentum change. So what I would do is you have the location, wait for better structure. So what you want to see in this situation is you want to see an attempt to go higher, okay? You want to see a rally attempt, but you don't want to get into that. Leave it alone. Let everyone else figure it out, right? Like it occurred a few weeks ago, rally attempt. Let this thing push up a bit. Let it retest. Maybe it gives you a nice elongated double bottom. Maybe it gives you a higher low like it gave you back here. But wait for something like that in these situations because it tells you that stability is coming back into the market rather than this bearish momentum, because buying into that bearish momentum, even though you're at an attractive level, the momentum can push you right through the level, right? So I don't think it's worth taking any risk at this point. Wait for structure to improve, right? We see that when Bitcoin pulled that 12,000 point move a few weeks ago, whatever, it was the same deal, right? Had to wait for some sort of structure to develop afterwards before even thinking about doing anything. All right, cool. So Bart. All right, so I said hi. Colgate. Okay, Colgate. What is the symbol for Colgate? Let me see. I have to type it in because I don't know the symbol. Is it like, cold. Okay, there we go. All right, maybe not. Let me see. Oh, is it coal? Hold on. Oh, CL. Got it, CL. So talk about, this would be like a Dow stock, right? This is a market, typically a market correlated stock generally follows like the stock market index, like the Dow type of thing. Now let's just look at this. Also, a lot of people use this as like an economic play because they pretty much make all the consumer staples type of thing, right? Stuff people buy, toothpaste and whatever, right? No matter what the economy is doing, they still have to buy that stuff. But anyway, so let's see what's going on here. Let's zoom out a bit. I mean, right away, I see range-bound market. Okay. Let's look back at some levels. Let's see. So over here, you have a support. It's in a supportive area. All right. Your main resistance is up in this area here. All right. So that's your range. This thing is in a consolidation, a very broad one, as you can see. All right. So that's interesting. That's a useful piece of information. Now, as far as its recent price action, we can see that price has retested that low, bounced off a second time. All right, that's interesting. Now, here's the thing. That bearish structure or the corrective structure that it's been in recently, we can still argue that it's still in play because it hasn't, while it's trying to take out resistance levels, it hasn't done it yet, but it's trying. All right, and you do have a higher low in place. So you do have the beginning of a change, but here's the thing. All of this is occurring at the top of the stock market, right? So there's a thing called relative strength or relative weakness, which has nothing to do with the RSI. And when your market stock, because this is a market stock, when your market stock is not really behaving with the entire market, that is a sign of weakness. When your market, the S&P, Dow, NASDAQ, they've all been making high after high after high after high after high. Why isn't this thing on its highs? Or at least in the middle, right? It's coming off of its range low. and it's not even a biotech stock, right? It's not even a stock that typically should be doing its own thing. So that is a sign of relative weakness. Notice today, stock market's up pretty decent. You have a green candle, but it not even taking out resistance. So here's the thing. You want to play this. This is probably more appropriate for a long-term play anyway, this type of stock. I mean, how wide is this range? 74 is the low. The high is 84. So it took an entire year practically, or 6 months for it to move 10 points. That's a slow mover. I mean, you can find stocks that do that in like a few minutes, right? But anyway, everyone has a different risk tolerance. It's just you have to have different expectations for something like this. So here's what I would say. If you're interested in a long, you might as well wait to see if you get another test of that low, because the stock market is on a high. And what happens if the stock market pulls back? Is this thing going to rally? It's more likely to pull back and test the low. So you might as well wait for a better price. Something like this too, I don't know if they pay any dividends. Maybe they do. But something like this would be good to accumulate. You know, you buy some as it pulls back, and you stop buying, right, if it breaks, and you wait for the next support after that. I mean, your next support, if it breaks, is going to be around here somewhere. Let me see. Around $73. It's not too much lower, but that would be another area to be considering, right, if you're looking to maybe build some inventory in this. But right now, current prices are just not very attractive. I think you could do better as far as waiting for some kind of pullback. As far as a swing trade goes, I don't know. I mean, this thing is really slow. So I guess you can play a similar game. But either way, you should wait for that level and see if you can get some sort of reversal candle. I mean, look what it gave you a few days ago. Bullish pin bar, right, off of a higher low. A few days before that, there was another bullish pin bar. So you just have to wait for those, right, and see if you can get a slightly better level. I wouldn't chase this here into this resistance. All right, and if you do buy some, right, and it breaks, it should break this resistance because it's trying to. That's theoretically what you want it to do. Then you're looking to, your reward is going to be measured by the middle of the range, not the high of the range. Look at the middle. The middle is a lot easier to reach, right? And often price gets very random there, and that's when a lot of people think it's a good time to buy, and you sell it to those people. So that's what I would be looking at for something like that. Again, it's a slower mover, so obviously you're going to have more patience with that one. Okay, so thanks for asking about Colgate. Okay, Elizabeth wants to see Ethereum. Man, it took me forever to get to this one. All right, let's take a look at Ethereum. Where is my Ethereum chart? I like to look at the chart here because I have some levels on the chart. Hold on, let me find it. That's not it. Hold on. Where did I put my, oh, it's up here. Okay. I don't even know where my Ethereum chart is. All right, is this the one? Hold on, I'll pull it up here in a moment. That's the one right there. Okay. So, Ethereum. Now let's look back here. So Ethereum has been wild, right? It's been resilient. I have to give it that. Let's look at the bigger picture levels. Okay, I mean, not much has changed in the bigger picture. It's still flirting with this 4,000 point area, trying to break above, trying to reject it, and it's not really rejecting. I mean, I can see why. You know, there's a lot of stuff going on with this, especially with all that NFT stuff and all that stuff built on the Ethereum blockchain. I mean, it's nuts what's going on. I was looking into some of that stuff. Man, people are nuts. That's all I have to say is people are nuts. Anyway, so as far as the Ethereum chart goes, here's the thing. You have a support in this area here. That coincides with the Bitcoin at 40K. Remember the 40K reversal? So that coincides with that. And this rally pretty much coincides with the Bitcoin rally that we've seen. Now, with all that being said, the structure is strong. There's nothing but higher lows, and we have another higher low in this area here. With today's candle, that higher low is now established once this candle closes. So in theory, this thing should break out and go higher, okay, based on that, where the higher lows are often followed by higher highs. Now, those would be new all-time highs on this thing pretty much, if this thing can clear this, 41.69. So can this thing reach 42 in the next few days or above 42? Yeah, it's possible based on this structure. So if you're long, I mean, there's nothing to do here but let this thing ride. If you're not long and you want to go for the breakout, you can measure your risk from that 38.89 low. So basically 38.50, something like that is where the stop will have to go. Keep in mind, that if the breakout fails, which is also a possibility, it'll probably take out that low pretty quickly. That's the first low that's going to go. Okay, so just something to keep in mind. There's no way to know how it's going to do, what over the next few days. It's just the structure points to higher prices. Now, in these situations, people often like to ask, how do you know? What are some good estimates as far as how much higher this thing can go if it breaks the resistance? Well, whole numbers are a good reference point, right? So if 42 is cleared, 43, 44, those are possibilities. Another thing you could do is a projection. Let me see if I can do one here for you real quick. You can use your projection tool, and that, if you use that properly, I'm not going to teach you how to use that, but I'm going to just show you real quick. Look at the trend-based extension, right? It's a projection tool, whatever. And you measure 3 points, basically, from like this low, right, measured from this high. This will give you some points. As you can see, you're at the 3618, right now. So the 4236 is what, 4560? So 4560 is a proportional level, right? It's in proportion based on this movement on the bottom here, or your first wave. So that's how, one way to look at something like that. So use that as a reference point. In fact, I used something like that to get this Bitcoin level here on Bitcoin, this 67K. As you can see, it rejected it quickly. That was a projection, all right, because there was no price history for me to go by at that time. All right, anyway, so I hope that answers your question, Elizabeth. All right, Peter from Slovakia, ADA, let's take a look. See a lot of hype about ADA too, right? Now, ADA, a bunch of coins looked similar to this recently, right? ADA, there were a few other ones, and I talked about it in my previous stream. These consolidations, right? These elongated consolidations. That's an important pattern. Now, I said, you can buy some, and basically you need to hope, because that's all you can do at this point, and hope is usually not a good strategy, hope that it breaks higher, right? And then once it breaks higher, you have all the people that are short or whatever, they all pile in, and you get the vertical move. Well, you got the vertical move the other way, all right? Which means all the longs are piling out. And this is exactly what you don't want to see if you bought into that consolidation. So now, with that being said, we have this inside bar, this bullish inside bar that's of course going to lure some more people in thinking, oh, okay. Now, there's a couple of ways you can play this. That inside bar, here, let me just draw a line on that. That inside bar is coming off of this support. So you do have that, the extreme range low, we can call it that, right? You have the range low. If you get the break of the inside bar high, you want to give that a try as a long. That technically is a long signal, okay? But if the next candle opens and it turns red, right, it taps you in, let's say it takes out the high, you get in. And again, I'm talking from the swing trade perspective. And then it turns red and takes out that inside bar low and takes out this, what is this, $1.90 low. If that's taken out, take the loss. Get out of this thing, because that's not what it should be doing, okay? Especially in light of where Bitcoin is, where Ethereum is. This thing should be doing better, especially with all the hype. I mean, they're saying Cardano is going to 50x by next week and all this other nonsense, okay? So too many longs in these things. They all bought the hype, and now they're stuck in it. You should not, first of all, you shouldn't see a bearish outside bar, but maybe, maybe that's some kind of overreaction to something. Fine. So you still have a chance to try something out here. But like I said, if that support breaks, that range support breaks, that's not something that this thing should do, because that will be a change of structure, right? Now keep in mind, many of these altcoins, like especially one of these that gets hyped all the time, charts are going to be hard to work with, a lot harder to work with, because they're driven by pure hype. All right, have you seen SHIB? Have you seen what this stupid thing has done? Look at this. Look at that. Right? That's pure hype. There's no way, the chart, like we could have argued that there was a consolidation. You could have bought that breakout, right? Looking back, of course, is easy. But, you could have bought the breakout and maybe made something out of this. We have some people in the chat room that took advantage of that. I wouldn't call something like this. But the point is, this is pure hype. And anyone that got sucked into this green, the large green candle, people that are stuck at the top here, now they're looking at this thing, it's minus 13%. I mean, if you didn't think that was coming, but you know, if you watch any videos on this, they're saying that you're going to be a millionaire by next week. Some of this, next millionaire, blah, blah. You know how many video titles I've been seeing about becoming a millionaire with altcoins? It's unbelievable how many there are. People actually think that it's that easy. So that just goes to show the magnitude of the hype. Anyway, so I just wanted to mention Cardano is one of those. I know it has a lot of great things and fundamentally blah, 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 and blockchain, it's going to bank, blah, blah, blah. I've heard it all, but you know, that chart should not be doing what it's doing if it's going to be strong. Anyway, so that's Cardano. Thanks for asking, Bart. So, okay, so Bart, I answered that question earlier. Okay, hey, Ing, good to see you. Travel, good to see you. Guy from Germany, hey, good to see you again. All right, so I'm just catching up on the chat here. No problem, Guy. So, Travel, I wanted to ask you a more economic question. Have you ever thought what would happen if Bitcoin value rise to the highest levels and new billionaire elite would appear across? You know, Travel, I haven't thought of that, but obviously these altcoins, especially some of these like SHIB right there, and some of these people are making lots of money, and they're not making this money with any type of skill. They're just throwing money at these things, which is very easy to do. And a lot of these people can lose the money, right? That's what also allows them to play. You know, these aren't like poor people who have no money and they're just throwing everything they got and they're hoping for the best. These are people they're making good money to begin with. Maybe they're making good money in some other business or whatever. They throw money into these things and their $5,000 throwaway turns into $250,000 because some stupid altcoin. That's just where we are right now. And that, I think, if you want to talk from an economic perspective, I think that's part of that is an effect of the stimulus and all the nonsense that's going on with this money printing that we're getting, especially from this country here. And you know, there's a lot of money floating around. So that money is going into things and because it doesn't know where to go, right? So it's going into all these things. I mean, look at the NFT space. The NFT space is the most ridiculous thing I've ever seen. But, you know, I can sit here and try to judge it with logic, but that's not really a good idea with these things because I should know, of all people, I should know that these things don't move on logic, whether it's Bitcoin, whether it's an NFT. It's just, you know, NFT, a piece of art, a graphic, right? A GIF, a graphic selling for $50,000 or $100,000. It's just hard for me to comprehend. But, you know, as a trader and speculator, I shouldn't ask why. It just is, right? So either you play the game or you don't play the game, right? But that's how you have to look at something like that. Because if we sit here and try to apply logic to these things, we'll miss a lot of opportunities. I mean, I haven't played that NFT game, but I've been just watching it from the sidelines, and some of the stuff that's going on. You know, I'm curious about like the future. Where is all this stuff going to the future, right? With the blockchain gaming, and there's tons of videos. Just Google it or just YouTube it. There's like 1 billion videos on this stuff. So if you want to learn about it, it's all there. And they mention coins. Oh, you should get this coin. You should get that coin. This coin. You know, because you know you have to hold on to it for a few years. But when the video game comes out, it's going to be huge. Right? They're all going to be huge. Anyway. So, but there obviously is a future, and if that's where the future is going, that means one thing. There are going to be opportunities, right? So it's really, and some people are going to grab them, and a lot of people are going to miss them. That doesn't change. Bitcoin was an opportunity in 2009 that no one knew about. No one was making videos about it. Not one fake guru was talking about Bitcoin. You know, that was less than $1 back then, and it took a few years for people to, you know, get a hold of that one. So just something to keep in mind. Okay, anyway, so good question. Let me see here. Jesse, hey, Jesse from Poughkeepsie, how are you? Haven't seen you in a while. Gotten a long breakout of CT. Oh, okay. Any thoughts on take profit? Fibs put me around 130. Okay, let's take a look. What is that? CT, is that cotton? Man, we got like a softs trader here. Yeah. Okay, no, is cotton a soft? I don't even know anymore. All right, so again, nice. These things are going to react to the dollar. I mean, obviously, cotton, they use that to make clothing or whatever. This is going to be a dollar reaction. As far as long, you got long at what price? Let's see. That's if we clear 116. Okay, you got long on the breakout. Okay, so I guess I'm assuming you're talking about this over here, right? So I'm assuming you're talking around 10, what is that? 109, 110. Okay, so you're playing the breakout. Not a bad, it's a valid strategy, but let's look at the location. So you have your resistance is right here. So far, no rejection yet, right? And of course, you have the dollar going your way. But like I said before, that whole dollar talk, if the dollar turns, this thing's going to fake out most likely, okay? Because this is probably getting a lot of pressure from the weak dollar. If dollar holds 92, watch out. You can easily get a double top here or a fake out. But again, this thing, if the dollar continues lower, then you may get that push that you need. So you have a higher low over here. It's a higher low consolidation, just like that SHIB chart. It looks just like it, right? The same idea. So there's nothing to do here. You're in from the breakout. Your risk, I mean, I don't know where you're defining your risk from, but theoretically, there are two places. The bottom of the entry candle that you're in, which is going to be tight. What is that? 109.50 is the breakout, is the low of the breakout candle. Is that right? Right, around there. Or the structural low, which is 107.70. That's actually the more appropriate place, but you may not want to take that much risk. Okay, that's going to be up to you. But that which level you're taking your risk from is going to shape where you start taking your profits. That's going to be an important factor. So once you start reaching 1-to-1 or more than 1-to-1, maybe you're at 1.5-to-1, that's really a good place to just take something off the table, unless there's absolutely no reason to sell, right? Like right now, there's just no reason to do anything. But it's usually a good idea, because let me just point something out, right? And you see this not just in this market, but in every market. This bearish pin bar that you got like in the beginning of the month there, see that bearish pin bar? At one point, that was 100% green. Okay, and then it turned around and gave you a bearish pin bar. That's why it's so important to have profit targets or limit orders placed ahead of the market so that you can take advantage of those things. Because if you stay in that and you're like, oh, I was up all this money and now I'm red, right? That invites you into hope mode usually. So it's better to take money off the table while you have the opportunity. So a good way to do that, again, is you look at how much you risked and you say, okay, look, I'm at 1-to-1, I'm at 1.5-to-1. 2-to-1 is even better if the market wants to give that to you without much effort. And you start locking something in. Once you've locked something in, at that point, you can just use a trailing stop and see how much more the market wants to go. Of course, you're not going to get the top, but by using a trailing stop, and I'm talking about manually trailing, you allow the market to pay you more until it no longer wants to pay you. And that can open up an opportunity if this thing does something stupid, like over here, right? When it had this like vertical move basically, right? And it allows you to capture more of that move. But of course, you're never going to get the whole move, because when you get stopped out, it's going to hit you at the low, right? You're going to be getting out at the low of that particular push. You understand that? All right, anyway, so good question on cotton. Hey, Sean, thanks for stopping in. Always good to see you. When you step into pins, swing in position. Okay, so Pinterest, let's take a look. Oh, yeah, look at that. I guess they didn't have a good report, huh? Now, again, just like the one we looked at earlier, this is what I mean. Look at this going into the report. A lot of optimism there. Buy the rumor, sell the news. Get me out of this thing. So look at that, right? What a mess. All right, so to answer your question, enough with the Seinfeld, enough with the Seinfeld impressions. So you broke this support over here, okay, 51.50. Broke that support. That's not good. All right, that's really not good. So to answer your question as far as when to get in, as far as swing in position, let this thing stabilize. That's the first thing. Where is the next support is the next question. Man, that's like, I'm going to have to go back a bit here. All right, so you have this area right here. It's an old gap, right? You see that where I drew that box? That's a support area. Gaps often act as support or resistance areas. So you're right in there right now. So you have that, okay, as far as an attractive location. And then once you clear that, if you clear that, you're looking at this area here, which is what? What price is that? That's $39, around $39, right? And this thing's fooling around right now at 45. So you still have some room to play with, right? About $5 worth. So so you should be interested, at least as far as attractive levels go. Okay, that's really all. That's as far as the trade idea should go right now. Areas of interest. Now, because you're dealing with this bearish, this momentum, this sharp momentum, wait for stability. So that can come in the form of wait for like a little mini double bottom to develop. Let this thing fluctuate a bit. Let it give you some price action like it looked back here, where it just kind of pops up, pulls back, pops up, pull back, that kind of thing. Let it form a new support. Let it prove the support. That's the more conservative thing to do. That's, again, I'm speaking from the swing trade perspective. Once you get that, then you're likely to get a structural change. Let's take a look at the weekly chart. What's going on here in the weekly? Because the general structure on this thing, I mean, is generally bullish, okay? And now you just have this nasty move here. So, yeah. So I would wait for at least some sort of stability before getting involved again. Maybe you can pick up the bottom of the bearish structure and be positioned for the next leg. Now, as far as position trades, well, you're on a low. So if you want to start building inventory, again, this, I don't know if this is one of the best choices for that. I don't think they pay any dividends or anything, but again, that's up to you. But a low is always a good place to pick some up. So if you want to pick a little bit up here, since the momentum is really against you, maybe you pick up, I don't know, if you're interested in accumulating a couple of $1,000s worth, again, I don't know what your objective is, maybe this is a good place to pick up $100 worth, or $200 worth. But keep in mind that, you may see 39, you may see 38, and if you see something like that, don't keep putting more in, right? Let the thing stabilize before taking more bites. But initially, you can take your first bite anywhere, and then you see where it goes from there. Once it starts to stabilize, you can buy a little bit more. But when it comes to inventory, I think a more effective strategy, because you could use charting to help you with part of the timing, but really, it's really more about price and size control, right? And having your allocation objective, meaning, okay, I'm going to invest $5,000 into this thing, or $10,000, whatever the amount is, and you do it over time. So perhaps, we're starting a new month out, so maybe you want to buy 100 shares or 50 shares or whatever on the first of the month. And then maybe in the first of the next month, you buy your next allotment or something like that, right? So you figure out some kind of schedule that way, and that will give you an average price. Even if this thing wants to pull back another $10, at least you're going to be getting a better and better price. And if you get some kind of dramatic move lower, instead of doing a single allotment, maybe you do, instead of $100, maybe you do $200 if this thing is pushing an extreme low, right? So at least you're not getting too big too fast, because that's the mistake you need to avoid. You know that, you've heard me say it a million times. Anyway, so thanks, Sean, for asking about Pinterest. I hope you find that helpful. Let's see what else we got here. Schwartz Bond from Romania. He's my international man of mystery. Okay, and he manages all my Romanians. All right, Schwartz, good to see you. Let's see, is he in Romania today? Okay, I think he is, because usually he tells us what other country, whatever exotic country he's in. All right, so let's see, what's up with these huge? Oh, so are you talking about Bitcoin? Yeah, I don't know, but let's go back to that. Is Bitcoin still fooling around? Is Bitcoin still being funky? No, Bitcoin's back to normal now. Yeah, that was just a temporary thing, whatever that was. It's back to 61K. I mean, it's nuts, right? This thing was at 56K just an hour ago. Yeah, just random noise. That's the way I'm going to look at it. You see, again, people are going to be searching for why, right? Why? Why did we just see that? It doesn't matter why. If you just embrace the random nature, hey, it's random. Right? Maybe someone had to unload a bunch of it. Maybe the exchange was doing something funny, whatever. But the thing, it was across all the exchanges. So I don't know what that was about. Maybe there was a large player doing something. Who knows? It doesn't matter. You know why? Because it's not going to really help me judge future movements, right? Because that movement is over, and obviously it got absorbed because the candle is now nicely green again. A lot of shorts probably piled into that and got caught, right? And that's what happens to people when they watch smaller time frames and they overreact to things. All right, so thanks, shorts. Always good to see you. Alex, would you say conservative short break of support followed by failed high? Okay, what market are you talking about? Conservative for short. What would you say is conservative for a short? Oh, conservative for a short. Okay, I got it. I got the question. Break of support. So conservative for a short. Let me pull up a market that I would like to short. Let's see. All right. So something like the euro was something I was interested. Not anymore, but I was considering this. Okay, not after this move. But so as far as a conservative short goes, you want to see. Yeah, you want to see like a lower high developing. So some sort of support previously should have broken, right? Like in this case, you had a support that was broken here, right, like 2 months ago or whatever. And you see prices retesting that area now. And we had a lower high, if you notice, before today's move, right? Let's just cover today's move. We had a lower high in that area here. So that, in my opinion, would be a more conservative short because it's a possible lower high. And theoretically, you should go for the lower low, right? And you had a couple of pin bar type of candles, inside bar to go short, blah, blah, blah. And then the dollar got hammered, right? So now this changes everything because now we have a higher low established, right? So now this is no longer a short. But that would be the idea of a conservative short. Now, if this changes again, which is still possible, then it may start out as an aggressive short, right? Because we have now conflicting structure. So for this to be a conservative short again, it needs to break this low, okay? It needs to break that support first and then retest. And if we get that type of pattern, what would that be? That in that case, you'd have a right shoulder over here, and that would basically be a head and shoulders in that situation. If it breaks here first, okay, it's got to break the support and prove to me that that it's not going to hold higher lows, and then we get the lower high, right? That would be the conservative short in that situation. But again, you want something that's generally weak, right? Everything that I just described, if you see something like that in something like the S&P, for example, right? The problem with the S&P is the general structure is not bearish, right? We can argue, and you can argue for shorts when it was pulling back and this and that, right? Okay, those are still aggressive because the broader structure is bullish. And all you're really waiting for is the high. Once that higher low shows up, you can see now the party starts, right? And the broader trend returns, reasserts itself. So you always have to look at that bigger picture. That's your context. And that's what helps you judge if that short is really conservative or aggressive. All right, so I hope that answers your question. All right, let's move on to the next question. A good question, Alex. Hey, DJ, good to see you. Nice to see you. A lot of our regulars. Hey, Ying from Barcelona, mucho gusto. Take a look at Altria. Seems a bearish structure. Okay, let's take a look. What is that? Is that MO? Yeah. See, look, I knew that. All right, look. Obviously, report, right? Looks like a company report there. Look at the gap. Look at the steep momentum. All right, and you're saying here, looks like the structure is starting to change. Well, let's look back a bit. It could be because you have, for quite some time, you've had this consolidation, right? Notice how far back I'm looking. So for quite some time, look at this consolidation. I mean, for a while, right? See all that? And you could have argued that it was a higher low consolidation. You could have made that argument. Here you are now breaking that support. So yeah, you are right. The structure could be changing, but it is a little early. This is steep momentum, and it compromised the support. So here's what you want to see. First of all, if the structure is going to change to bearish, this needs to continue to go lower. This momentum needs to push a little further. You don't want to see a failed breakout. Okay, if the next candle turns into a bullish pin bar, like right there, then it's a fake, right? Then the range is still intact, and that actually would become a long in that situation. Because I mean, look at the level. Look how much support you've gotten at this level, and it's a range. This is not a trend; it's a range. So you can work with something like that. I think it's more appropriate for or less aggressive, I should say, if you get a nice steep bullish pin bar, inside bar, because you don't have a trend here, right? Or if you want to be more conservative and wait for like a little mini double bottom to develop, that's a different story as well. Usually, like on something like Bitcoin, we'd say wait for the stability, wait for the stability. But this thing, the structure has been range bound for so long that it has a different context. So I hope you can see the difference, right? that's where a lot of people go wrong. They don't know how to differentiate between these situations, and there is some subjectivity to it. So it's not something that like you can read in a book or something that some fake guru is going to tell you, because most of these people have only been in this game for a couple of years and they don't even know themselves. So, but anyway, that's how I would treat something like this. It could be the beginning. So this would be a great place for a potential long, though, you know, if you get the reversal structure. Now, with this steep momentum, again, give it some time. If it continues and you're interested in a short, then what you want to see is a retrace. You want to see the bearish momentum push a little further, and then you want to see a retrace to this level, and then a sell signal, like a bearish pin bar, in an area like this. The old support becomes new resistance. That would be your next lower high, right? And that's the higher probability area to get short in that type of situation, right? Let it test and then let it fail again. Not like a lot of people, what they're going to do is they're going to see this candle and they're going to jump into that. They go, oh, lower high, this thing's going to break lower, blah, blah, blah. But you're going into a pretty heavy duty support. I would not short this at these levels. If you're thinking short, I would be thinking long. I would just let it, you know, just let it cool off a bit. It's still a little early. All right. But watch for that fake out. Anyway, thanks for asking about Altria. Nice example of playing a range-bound market, all right? Even if they're, I don't care how negative their report was and all that other nonsense, because that is now priced in, okay? All right, so Yin and Coinbase. Okay, Coinbase. Coin. Let's take, what's Coin up to? So Coin obviously is going to follow Bitcoin generally. How much is this thing? 319? Okay. So Coinbase, as you can see, it broke this resistance that it had, okay, up in this area right here. What is that? What is that price? 275 area? Is that right? Yeah, that area there. So as far as Coinbase goes, I wouldn't be buying it here. Vulnerable area, especially with Bitcoin where it is now. Bitcoin may continue higher, but I don't know. This stock is just you're better off in this situation not chasing these things, because, you know, Bitcoin pulls back, this thing gets hammered. Wait for a support. That's the best thing to do. Just be patient. Your support is that 275 area. Okay, so any test of that area is really where you should be most interested. That would be a great spot for a higher low. That would be a great spot. Of course, Bitcoin will have to pull back, but right now, like fooling around inside of here, you're getting like an inside bar. It's a possible failed high. I know Bitcoin's been holding and Bitcoin may push higher, but this would be more appropriate, I think, for a day trade, playing this type of move. Because what if Bitcoin goes to like 67K again or something, maybe a little higher, and then fails again? What's this thing going to do? Go up maybe 5 points, maybe 10 points or something, and then give back 20? I don't know. I just don't like buying highs. So yeah, I would not do anything with this thing until it goes back to a support. And it's most likely following Bitcoin. All right, so that's all we have to say about that one. Thank you for asking. Okay, what we got here? Thoughts about SPCE? Sure, let's take a look. SPCE, what's going on here with this? Oh, look at that. So I guess this is a hype stock, okay? And this is usually driven by some kind of news. The recent structure, it was consolidating. The consolidation broke. You know, I always talk about those, like with Cardano and all that. Consolidation broke. When they break like this, when they break, if you're in that from the consolidation, this is not how it should behave, right? So when they break, really you should get out. If you're in it, take the loss. Now, with that being said, this thing, if it's trying to stabilize, this thing's at 18.5. We can argue that this move is basically corrected this sharp move from June, right? That hype move right there. And now you're at the lower part of that corrective move. Okay, so you have still an attractive area. If you're interested in a long and something like this, you do have a potential failed low situation. You have a little mini inside bar. What time is it? Is this thing closed? Yeah. So if this thing takes out the high tomorrow, you can get a buy signal and you can keep your risk pretty tight. I mean, what's the low on this candle? 1830. You could probably put your risk at set your risk at about $1, because if this thing gets going again, right? The midpoint of the range is usually a reasonable area to measure your potential from, and you're looking at what? What is this? $29, $30. So it's possible to see a push, you know, a $15 push. If you're risking $1 or $2, and you're trying to get like a 10 or 12 point move out of that, that's within reason. And this stock has the potential to do something like that. Just understand that because it just keeps breaking lower, you know, you're still fighting that structure. So what I just described here, the failed low, that's more aggressive because the resistances are still intact. If you want to be a little more conservative with this, perhaps wait for a resistance to break. Okay, your first one is at 20.25. So if price compromises that resistance and you have the double bottom in place, that's usually a good spot. Yes, you're going to have to take a little bit more risk, maybe $2 or $3, but the potential is worth it because I think you can reasonably make $3 to $6 to $10 to $12 in something like this over the next few months. Again, keep in mind, that's what the chart structure points to, but this stock is driven by news, primarily, any type of news. So if there's anything on the schedule that can act as a catalyst, that may be helpful. So maybe you could plan around something like that. But generally, this is not a bad location. Plus, no one's paying attention to it, which is another good thing, right? When these things are forgotten about, they're not on everyone's radar, that's usually the time to pick up some. So definitely a good one to keep on the radar for a swing trade, but that would be the conservative and the more aggressive way to consider it. All right, so I hope that helps. Definitely a good one for the radar. Thanks for mentioning. John, from Spain, mucho gusto. Thank you. Oh, no problem, John, no problem. All right, what do you think about SHIB? All right, so I talked about SHIB earlier. Yeah, I wouldn't go near SHIB. I hope you're not in from the top, because if you're in from the top, you know, you're going to have to, I don't know, there's no other strategy but to hope. And hope is not a good strategy on something like SHIB. SHIB is a type of thing that you need to be in very early before all the YouTubers start hyping it, right? Because they've been hyping that thing for a couple of weeks now. And now it had that ridiculous move. So I certainly don't believe, when they go nuts like that, usually when they're obvious and you have people on YouTube saying that you're going to be a millionaire by buying SHIB, everyone piles in at the top of it. And the biggest problem with SHIB that I find, besides it being a joke, right, or meme coin, or basically there's no real value. What are they selling, NFTs, and it's a video game, some kind of nonsense. There's like trillions of coins available. Okay, so there's all this hope and hype and that's going to go to 1 cent. Yeah, there are trillions of. It's ridiculous, right? The whole thing's ridiculous. So you're playing a hype game. So the best way to play that hype game is you need to wait until it gets hated. You need to wait until it's off of everyone's radar. And then you have to spend some time poking around in these chat rooms and all these other places where they're going to pump it and hype it again and try to get a sense of when they're going to do that again. I mean, that's the only thing I could think of. Otherwise, you just buy a bunch of these garbage coins, right? You buy $100 worth of a bunch of them, and when they do something like this, you get out. That's the only way to play them. Right? They're just lottery tickets. So anyway, thanks for asking about SHIB. Lots of videos about it. Okay, Ying, do you mind to share your opinion on inventory and stocks with dividend? Just like, okay, so Ying, just again, real quick. Let's pull up a stock. I know like something like an MPC, right? I believe they pay a decent dividend. There's plenty of these. Energy stocks, there's pharmaceutical stocks, all kinds. So in these situations, it's really, you can get off the chart a bit. And really, it's a function of size. So you have to have an amount that you want to invest. So let's just say you have $1,000, right? That's all you got. That's what you want to invest into this thing. You're going to break that 1,000 up into smaller increments. And now you're going to invest those increments, okay? But at what rate do you invest them? And I think to get off the chart, you just invest on a time schedule. So 1st of the month, 15th of the month, something like that. And you want to, if you want to put some more weight on lower prices, then what you do is, if you happen to check on the day that you're going to buy, let's say it's the 15th of the month, and this thing is at a low, right? Let's just say this thing is pushing a support. For some reason, it's pushing an extreme support. You say, oh, what a great location. Instead of buying $100 worth today, I'm going to buy $200 worth because, you know, I only have 10 allotments of 100, but today I'm going to buy 200 because it's at such a good price. Okay, otherwise you buy only, like if you're at the highs like you are right now, there's no reason to be putting on waiting more at the high here because you're at a high. All right, so that's one way to kind of skew it to better prices. Because with inventory, usually the inventory game or position trading, those are going to be long positions, right? You're not really going to do that. Doing that on the short side is really a bad idea, right? I know you didn't ask that, but anyway, I just wanted to mention it. Okay, Ying, so I hope that answers your question. Bart, can you take a look at, what is that? FILB? All right, let's see. FILB USD. Is that what is that? Okay, FILB BUSD. Oh, Binance. Okay, so this coin looks similar to a bunch of these that broke their consolidations, like Cardano, right? Notice they were all consolidating, and then they had this outside bar, right? They had the bearish outside bar. You see that? That's not a good sign generally. The consolidations should have held, but just like Cardano, even though it broke, it's not really, hasn't made much progress on the bear side, right? You have this support right here, which is still arguably part of the consolidation, especially if you look back here. I mean, look at these levels back here. You're still in that vicinity, right? You're still in the area. So that's not really like a major breakout. Now you're getting an inside bar on top of that, and it's bullish. So range low may be holding. If you want to take a chance on something like this for a swing trade, how much is this thing? $58? All right. So on a situation like this, you want to wait for the candle to close, right? Similar to like what Bitcoin's doing, except Bitcoin has an outside bar. This has an inside bar. When the high of that candle is taken out, that's your buy signal. The risk is going to be measured by 54.5, around there. That's your range low. So you're going to be buying this thing. Let's say it closes at the current price, $58.75. You're looking at about maybe $4 or $5 of risk, okay? Something like that. Now, if you take that chance and the next candle opens and basically goes to that stop over the next few days or whatever, you take the loss because it should not be doing that. And this first outside bar could be a sign of, you know, bearish momentum to come. It could be. So that's why you have to control your risk. But it can also be a fake out. There's no way to know. So the key is you have to be willing to take the risk. Now, if this thing holds, like all these other junk coins, if it holds and you have the higher low, then you're likely to see a retest of the midpoint of the range. Now, the key there is you need to justify your risk. So if you risk $4 or $5, you should be looking at a profit target of around $4 to $5, right? The first one. It's a good idea to spread your profit targets, right? Don't just have one. Maybe you have 2 or 3 to average out the profit target. That helps you also hold on to the move if the move is larger, while at the same time helping you to reduce risk sooner once you can justify your risk, right? It's a good idea to start taking something off the table because we see a lot of times how these things fake out, right? And it helps you capitalize on that. So I hope that answers your question, but not bad. A lot of these things are in this position, so it's not bad. It's definitely a buy signal developing like Bitcoin, okay? So I'm guessing that if Bitcoin fakes out and fails and breaks, then these things are probably going to break too. So a lot of these coins have been starting to break away, and a lot of them seem to be doing their own things, right? Where before, a lot of them were just really tightly tied to Bitcoin, but now I'm noticing, you know, a lot of these coins that we're looking at, a lot of them are just sort of starting to, you know, trade on their own. And that could be because of all the hype. I mean, you just go on YouTube, there's dozens and dozens of videos. The next 5 coins that you need to own by December. The next 5 coins that are going to make you a millionaire by next week. I mean, I see one title after another. I'm like, oh man, it becomes very, I don't know what the word is after a while, but it's like, man, people still believe this stuff? I don't know. I'm definitely in the wrong business. I should be hyping altcoins. I'd probably be doing better. All right. Anyway. Let me see what else we got here. So good question, Bart. Zelta from Riga. Hey, Zelta, good to see you. Okay, let's take a look. So these, all right, these are typically, these are very heavy news driven, but you are at a range low, okay? There's clearly a consolidation, clearly general trend is bullish, and you're at a range low. So good place for a long, okay? Certainly worthwhile place for a long. Today's candle is it's not exactly an inside bar, but it's trying to be one off of the range low. So you can still count that. If it takes out the high of today's candle tomorrow, you can put a pretty tight stop on that, okay? And you have all this range potential, even if it goes to the middle of the range. So I would say it's a good one for the radar if you're interested in that one. It's probably not as fast as a mover as some of these others. It is kind of expensive, but you get my point, right? So yeah, not a bad idea. Thanks for asking, Zelta. DJ, SQQQ, 13 call. Oh yeah. How much money is that? Gambling on SQQQ. Yeah. So the Nasdaq, you know, I'm not playing that game anymore, DJ, with the betting against the Nasdaq situation, because it's nonsensical, right? What's going on here, and basically you're betting against stimulus, you're betting against money printing, you're betting against all this stuff to keep these markets going. You're betting against the FANG stocks. I mean, I'm just not doing it anymore, because every time I've tried, it's green for a little bit, and then you get this type of move, right? Wipes it out. So it's definitely a gamble. Thing is, if you're going to play that game, I would at least wait until you get like a reversal candle, right? This thing is just, look at that close. That's not even, all you have is a potential level. That's all you got. Potential level, potential double top or failed high, but there's no red candle, there's no bearish pin bar, there's nothing. Even when we get those little red candles, right? They don't go very far. So anyway, just something to keep in mind. Of course, I don't believe these markets can just keep going like this forever and ever and ever, but it's tough to play that game with those options, especially in buying really far out options. One of the obstacles to that is the theta decay is very sharp on those things. So you really need to be right like soon. Okay, so another reason why I'm just not really going to play those. But anyway, thanks for mentioning it. Reese from Western Australia. Wow, it's going to be like 4:30 a.m. over there. What are you, nuts? Reese is very committed. All right, okay, can you please look at FMG on ASX for an inventory long-term position? Okay, he has none. Let's take a look, Reese. Again, thanks for stopping by. FMG, it's a stock on the ASX. Okay, let's take a look. So, as an inventory trade, well, yeah, I don't know what their story is, but let's see. Let's look back here. So it looks like the stock used to be strong. Okay, failed to go higher not too long ago and got hammered pretty significantly. Now, here's the thing, Reese. Right now, you have a lower high established right here. Okay, lower high, and you're sitting at support. I would be expecting a lower low. So if you want to pick some up, I mean, I'm willing to bet you can pick some up at lower prices if this support breaks. So why not wait until the support breaks? If you're going to buy some inventory, unless you want to buy like, one share or a couple of shares. It's a cheap stock. It's not that expensive. But you want to buy a couple of shares. Thing is, this thing's probably going to get cheaper, right? The next point, let's look back here. The next point of support would be around here. So maybe you might as well wait. Let's see, what is that? 12, just, almost just below $13. Something like that is another area to consider accumulation. Now, I can see why, you'd want to pick some up off this support, but the lower high is likely to lead to a lower low. So keep that in mind. Maybe in a situation like this, since you're thinking inventory right from the start, instead of putting in like the full allotment, like let's say you were going to do $1,000, just for example, and in this purchase you were going to do $100, maybe instead of 100, maybe you buy 50. And then maybe if it pushes lower, you buy the other 50 or something like that. As opposed to, or if you want to do that timing thing like I talked about before, the first of the month type of thing, you are at a significant low. So if you just want to throw in a larger allotment for that reason, okay, but just keep in mind this structure, there's nothing stable about this, right? Usually when I say that, I'm assuming that there's some sort of like support nearby or something that's not about to break, right? Like if this was a few days ago, if it looked like this, possible double bottom, then I'd say, all right, throw in a slightly larger allotment. But now that we know this, why not wait a little bit more. So anyway, that's how I would treat something like that. But either way, I don't think it'll make a big difference. If you want to do a larger allotment or if you want to split it up and try to get some now and at the lower price. But that's what I think of something like that. Again, I don't know their full story. And once it starts to stabilize, that's obviously when, would be a good time to continue or maybe wait it a little bit more, okay? As opposed to just doing a date of the month type of thing alone. Anyway, thanks for asking, Reese. It's always good to see you from Western Australia. Okay, no problem, Alex. Okay, StarMade. Okay, I got in at 29. Okay, not sure what that is. 29 centers. Okay, Bart. Okay. Appreciate that, Bart. Thanks. All right, DJ. 18 cents. Wow, that's not bad. I mean, for those calls, but again, so that's cheap. Okay, so it's not like you're risking a ton of money there, but it's just the chances of that thing working out. You need this thing to turn like soon. And it's possible, but just keep in mind, like I said before with the NASDAQ, what you're going up against. You're just going up against a lot, plus the holiday nonsense and, all the optimism and everyone's buying everything and you know how that's going to go. Anyway, all right, forgot the country. Oh, Netherlands. Okay, cool. What are your thoughts about CRBP? Okay, no problem. Let's see, what is that? CRBP, what is that? CRBP. Okay, oh, pharma. All right, so you see, pharmaceutical stocks, like I was saying before, these have a tendency to do their own thing, right? They're not highly correlated market stocks. So I like them for that reason, because their charts are a little bit more meaningful. You don't have to depend on the S&P so much. All right, so here's the thing. You have this tight consolidation. That's a good sign. What's the bigger picture, though? So it's pushed its low, and it's stuck at the low. Obviously, there was a lot of action. How long ago was that? 6 months? 8 months ago? Something like that? 9 months ago? There was a lot of action, and it gave it all back. So you have a couple of things going for you here. The couple of things are, you are not in hype mode, right? It's quiet accumulation mode. Okay, that's good. So you can take a reasonable risk here, and if it starts to get going again for whatever reason, you have a lot of reward potential. So this is definitely like a good one for the swing trade radar. How much is this thing? $1? It's $1. Okay. So, something like this is so cheap. Basically, you don't even need a stop. You could put your stop at 0, right? If it goes to 0, it goes to 0, and that's it. So that's good, right? Your risk is pretty limited there, and this thing's got plenty of reward potential. I mean, even if it goes to the middle of the range, what are you looking at here in the middle? You're looking at, what is that, $2 maybe? So you risk $1 to try to make $2. That's going to the middle. If it can get beyond that, maybe $2.50 to $3 or something. How much is this thing? Yeah. So that's what you're looking at for something like this. So obviously it's a highly speculative thing. It's gotten beaten up. It's off of everyone's radar. A piece of news will have to come out to get this thing going, but it can come out of nowhere. You know how that goes. I mean, look at this thing just a few months ago. It came off of that. It's just when it starts to go and you've risked $1 and you have $1 in your favor, okay, or something like that, you should start taking something off the table. People make this mistake all the time. They see something like this, and, oh, I got this thing, it's going to go to $10, right? And then it doesn't go there. And then it turns around and you give everything back. So that's why it's always a good idea to take something off the table when you start meeting your risk. If you don't want to risk $1, I mean, you risk 50 cents, right? And then once you're up 50 cents or whatever, now you have even better reward risk on something like this. All right, so interesting stock, interesting chart. Certainly one of the more highly speculative, but I think the reward risk makes a lot of sense. Again, in these situations, the charts aren't going to be as helpful when they're really cheap like this, and when they go nuts. Because again, this nutty stuff is really news driven, right? It's really news driven. So how the chart helps you here is you know that you're not at the top, you're near the bottom. If anything, you're near a low, and you don't have to take a lot of risk in this situation. Not a lot of, of course, you want to always keep your risk within proportion to your account, but theoretically speaking, it's not like this thing can pull back $10 on you because it's only $1. All right. So anyway, thanks for asking about CRBP. All right. when, okay, was 5 cents, and then SEC issue, okay, straight from, and I had, oh. Yeah, well, Ying, I mean, that when it comes to those altcoins, there's lots of nonsense that goes on, especially with that, all that SEC nonsense. I still see hype videos about that. Anyway, all right, so I'm going to wrap this up now. I really appreciate everyone's questions. Yeah, I'm about that time. Thank you for sticking with me here and asking all these great questions. So again, with Bitcoin, I described a couple of those buy scenarios earlier. You have to decide what's right for you. This, again, as we saw, the candle was fluctuating as I started the stream. So that's the random nature of the market. Don't lose sight of the fact that you're buying into this resistance and you can get, selling activity can appear here. It's also possible that it can break out and keep going, right? So that's why you have to monitor these things and you have to make adjustments as the market offers new information. Right now, it's a strong candle. Theoretically, the next candle should open and go higher, right? That's what a strong market should do. If the next candle opens and gives you and basically turns into a bearish pin bar halfway through the candle or near the close of the next candle, that's not what a strong market should do. So that's that in that type of situation, I mention it all the time. That's what calls for adjustment, right? But you don't want to overreact. So by waiting for the candle to close and having your risk defined in advance can help you take yourself more out of the equation, because even with someone with a lot of experience like me, I've learned that it's better to minimize the decision-making process, right? Do as little as possible and let the market do all the work, because when you get into it too much, it's so easy to second guess because we're facing a random environment and there's a lot of noise. So we think we see things, or maybe there was something there and then it changes and then it changes again and then it changes again. So that often leads to over trading, second guessing, or worse, when you become frustrated, you say, well, I'm just going to take the stop away and whatever, because they always shake me out, right? And then that may work this time, but then there's going to be the one time where it doesn't work and you give back everything anyway. All right, so just a few things to keep in mind. All right, so I'll leave you guys with that. Again, if you have any other questions, you know where to find me. I'll be streaming again on Monday. One of these days I'll be able to get TradingView working again properly, but right now, I'll just be sticking it over here where, so you guys can find me over here. If you'd like to know more about Greenbridge, you can click on the Show More section of this video, and there's some links there. Things are becoming a little more active, so there are some more trade signals going on now and all that kind of stuff. So just something to keep in mind. We do have a 7-day free trial. A lot of the people here are members. Well, a few of the people in here have been longtime members anyway. Okay, just so you know, we've been around for a little while. Anyway, thank you all for sticking around, asking some great questions, and thanks again, Bart Guy, for the coins and all that stuff. Everyone, wherever you are in the world, enjoy your day, enjoy your evening, and thank you so much for watching.